Be honest, guys, do you find yourself owing them every single year? Well, if so, why don't you keep on watching? I'm going to give you 3 ways to get on top of that every single year so that you are not owing the IRS every single year. Keep watching. Is this you? Every single year, you're like, why do I owe them $5,000 again? Or why am I owing again? Well, there are 3 different things that you can do to help you either not owe money, or if you find yourself owing and there's not really anything that you can do about it, or you feel like there's nothing you can do about it, then I want to give you these ways that will help you so that when tax time rolls around once again, you are prepared. So the first thing that you can do is to pay estimated taxes. That means that you will be paying a set amount every quarter, that's 4 times a year, every 3 months, to the IRS, so that you will hopefully at the time of tax time not owe. And this is beneficial for you, especially if you say $4,000 every single year. You can break that up or divide it by 4 and say, okay, so every single quarter I'm going to pay the IRS $1,000. That way at tax time, hopefully, crossing fingers, I do not owe them $4,000. Hopefully I owe them less. If I do, they'll give you back that refund. If you owe them a little bit more than $4,000, you might have to pay like $100 or whatever. Say you owe them $4,100, you'll pay them the $100. They already got the 4 and you're $4,000 and you're good. But if you have said, you know what, I'm not paying estimated taxes, I don't want to do that, the second thing that you can do is make a change to your W-4. And I keep on saying this, and I've said this multiple times. Go to your HR department or your payroll coordinator or whoever is in charge of your W-4s and let them know that you want to make some changes to it. You can make small changes. You can have them take out maybe $100 to $200 extra every single paycheck. You can make tweaks to it to make sure that you are not owing. And you have to look at it and say, okay, if my tax bracket is here, how you look up the tax bracket, you can Google, guys. You can go on Google, say, if I make $100,000, how much percentage of taxes should I be paying? So say you make $100,000, say that the tax percentage is 20%. So you know that 20% of each paycheck should be going to taxes. When you get your paycheck, you look at the amount that you received, your gross amount, and then you look at the taxes that are taken out. And if you do the math, take out a calculator if you need to, do the math, multiply the income amount, the amount that you got for your income, times 20%. And if it is not totaling to what is on that paper that says how much taxes the federal government took out, then you definitely need to make some changes to your W-4. That means you can either add money and ask them to take out more money out of your taxes, or you can even make some switches to certain things like married filing separate or married filing joint, head of household, those type of things. Make those changes. Maybe in the other part, I'm doing this because I'm looking at the form, I'm thinking about the form in my head. On the bottom part, you can say, if you're married, you have to have that extra income taken out or that extra taxes taken out of your check to make sure that you are hitting the numbers that you need to hit, so at the end of the year you're not owing. Okay, if you have questions about that, make sure you put them in the comments. I know I went a little fast, I'm sorry. The third thing that I want you to think about doing, and this is for those people that are like, I'm not getting more taxes taken out of my check. No, and I am definitely not paying estimated taxes. I want to control my money how I want to control it. I'm with you. So what I would do is take out the money out of every paycheck that you would usually have to pay in taxes. So, like I said, remember, if you have $100,000 of income for the total year, 20% of that is taxable. How about you go to look at your paycheck, say, okay, out of this money, I'm going to take out 20%. Take that 20% out and put it into a high yield interest account. You can even put it into a certificate of deposit. Either one of those, you could put that in that account, and at the end of the year, when it's tax time, you can either have the money that you owe at that time, and you can withdraw it from your account. Like if you have a high yield interest savings account, you can deduct it from that account, and then or withdraw it from that account, and then you have the interest left over. That's one choice. Or if you have a certificate of deposit and you put it on a 1-year lapse, at the end of the year, in the year's time, you can cash it out. When you cash it out, you can take the interest, keep that, roll it over into something else, and then the amount that you need to pay for your taxes, you would go ahead and pay the IRS that amount. So those 3 ways can help you if you find yourself always owing money. 1 is paying estimated taxes. 2 is changing your W-4 and paying more taxes, having more taxes taken out of your paycheck. And 3 is just saving it yourself and getting interest on your savings. I hope this information has helped you. If you have questions or comments, go ahead and leave them in the comment section. I would definitely love that if you like this video, so that they'll know that people like this and they want to share it with others too. Thanks for joining me. Make sure that you keep on watching so that you can get more financial tips and tricks from me here at the Financial Spotlight. Have a great one. Bye.